it's taking a while, right? And I would sell. I might even conclude that the peaceful part here is a consolidation, right? So now once we see that we have identified that this is a consolidation, now I'm just waiting for USD to do an impulsive move, right? Because a lot of times, right, when there is a consolidation, right, such as over here or over here, there is an impulse, right, consolidation, impulse, right, just waiting for this whole consolidation to be over with, right? So on the daily time frame, we can also see more clearly that price has been around this area for a considerable good amount of days, right, since the 14th of February, which is the Valentine's Day, right, until now price has kind of seesaw around this area, right, and I expect, right, the USD JPY to ready up to the upside, and we'll see how it goes, right? Good evening, good evening, good evening for those of you who just joined us. Welcome. Okay, so this is the update, right? So later when I'm done with my slides, all right, then of course we will look for more trades to take together. Right, don't worry about the one or two losses that we have, right? We have GBCHF that closed out, right? It hit our take profit level, right? 1:6 risk reward ratio. So if you guys have followed every single trade that I've taken, right? Of course, I think probably you should be in profits right now. Okay, but I mean, again, right? It's quite impossible to follow every single trade that I take, right? Because now we're gonna put it frankly, right? We only have like what, 3 days together, and 1 hour each, 1 hour a day. So it's kind of hard, right? Sometimes when I do certain updates or when I take certain trades, I would have to wait until the next day or even worse still, right, the next week, right, to keep you guys updated, right? So part of puzzles of life, right? Sometimes, I think that this is a forex kind of like a basic education webinar, right? It's not, and of course, it's not really for the purpose of sharing my trades or sharing my signals. But of course, sometimes when I do share my signals, when I do share my trades, of course, you can choose whether you want to take it or not. All right. Good evening. Good evening. Good evening. Nice of you guys to join us. Right, so today we're going to talk about sentiment analysis. Right, we're going to learn about the market sentiment, right, how fundamentals affect investors' risk sentiment, right, and a risk on and risk off sentiment, right, fear and greed, right. So now when we talk about sentiment, it's basically how the market is feeling, right, and there is a meter, right, which is a fear, greed, and fear sentiment, right? So now why do we do sentiment analysis? Is to basically gauge, right, what the market is feeling, right? So the overall market is a combination of all the views, ideas, and opinions of all the participants in the market. Okay, so the combined feeling is what we call a sentiment, right? So or what I like to call it, right, majority of a certain feeling, right, is what we call a sentiment. Okay, right. So let's say, for example, if you're one person with $1,000 and you want to change the market, no, I wouldn't. I probably wouldn't be too ambitious, right, in hopes that 1,000 or even $1 million or even $100 million would change the market, all right, or will affect the market, right? So now, how much do you need, right, in order to be a majority of the market participants in the world, right? You will probably need trillions and trillions of dollars, right, in order to affect the forex market. Maybe it is possible to affect the crypto market with 100 million or say $1 billion, right? But in the forex market, right, you would need trillions and trillions and trillions of dollars. That's why the forex market is the biggest market in the world, right? And it's not that easily manipulated, right? So in crypto, right, we see really high swings, swing high, swing lows, really impulse move up and down and everything. So it's so volatile, right? Because now every single how should I put it? the barrier of entry, right, to be able to manipulate the market, right, is so much lower in the crypto market, right? Needless to say, the stock market, right? So stock market very super easily, very super easily manipulatable, right? And that's why I don't really like trading on the stock market or on the crypto market, right? I would say that crypto and stocks, it's good for investments, but if you were to say you want to trade stocks or whatever, I would say just stick to FX, right? Okay. Now, the dominating emotions or ideas, right, determine market direction. Okay, so meaning to say that like how I said just now, right, majority wins. Okay, just give me a second, guys. Okay, right, and then of course now every market top or bottom is accompanied by a sentiment extreme. Okay, but however, not every sentiment extreme results in a market top or bottom. Right, so let's take a should I use crypto? All right, so now crypto we have now. If we look at the crypto market, Bitcoin just went up to 69, 69K, 68K, somewhere around there, right? Now, what triggered crypto market to ready up, right? So much, right? And that is what we call a greed sentiment, right? Extreme greed sentiment, right? And why is that so, right? It's because right now we are already in March. Now there are a few factors. Right now we are already in March, and I think early this year they actually approved the ETF for Bitcoin, right? Bitcoin to be traded on ETFs. And in April there is a Bitcoin halving, right? Bitcoin halving, which is expected to be in April, right? So that is why there is extreme greed sentiment. Okay, so a market top or bottom is accompanied by a sentiment extreme. However, not every sentiment extreme can or will result in a market top or bottom, right? So sometimes, let's say for example, right, COVID-19, right? Yes, there is a sentiment extreme, right? The markets have moved into a extreme fear, right? However, if we were to look at war, let's say for example, Russia-Ukraine war, right? Okay, of course, there is a sentiment extreme, but it doesn't really it doesn't really spike the sentiment. Sorry, it didn't really spike assets, right, to top or bottom, right, except for the Russian rubles, right? And then of course we move on, right? Israel and Gaza war, right? The Israel and Palestine war, right? I mean, because the whole world is kind of immune, right, to all these news, right? To all these news. The whole world is kind of immune to all these news, right? And what happens is that when everyone is kind of immune, is kind of getting used to how things are, right? Then of course the market will slowly go from fear to not so fear, and then of course to neutral to greed, right? And that's how it is, right? So now even for COVID-19, right? So let's say for example, during the start of 2020, is COVID-19. Why is it called COVID-19? Is because the virus was the virus first the what was that patient zero? Patient zero. That means the first person who contracted COVID-19, right? Was in what, November or December of 2019, right? And then of course when we move on to 2020, right? And that's when there's a widespread of the Wuhan virus, right? So at one time, right, COVID-19 wasn't the name, right? It was called the Wuhan virus or the coronavirus, right? So then of course now, because this is something that the world has not seen in a long time, right? It is more easy to spread compared to, let's say, the SARS outbreak or the H1N1, whatever, right? And people are going to extreme fear, right? Why do people go to extreme fear? And that is because people think, hey, actually, maybe it's the end of the world, right? maybe it's the end of the world. Maybe it's time to maybe the end of the world is near, or maybe there's a zombie apocalypse, right? So now when market goes to an extreme fear, then of course we have to see, okay, what a company's extreme fear. Now it depends on situations, right? Let's say for example, COVID-19, I made quite a considerable amount of funds, right? And I was trading oil, right? So I was trading the crude oil and the Brent oil, right? So XTI, WTI, okay. And during that time, it was COVID-19, so I knew, right? Ships, nobody would import export. Retailers, nobody would buy things online, except for masks, right? Airplanes, nobody would fly. If we go on lockdown, right, nobody would travel, right? So all requires something called oil, right? So I actually shorted oil. At I forgot the price that I shorted oil. I think when I shorted oil, it was already quite late. It was trading around $45 per barrel. It actually went down to -$4 per barrel, right? So I think during the time when it came all the way down to I think $2 per barrel, right? The whole world halt trading, right? Meaning to say that everyone the trading halted. So at the point of time, I called my broker. I said, hey, patch me up with the liquidity provider, right? And I want to liquidate my assets for liquidate the oil, right? Because now something you have to understand is that now why is it so important, right, to get bigger capital, right? And why is it so important to kind of get in touch with the big boys, right? Is that now while the whole world is banned from trading oil, right? They stop you guys from trading oil, right? We, on the other hand, right, what we do is that we call up the liquidity providers, right? We are the ones who call up the bank and say, hey, can you release, I want to close my position, can you release this trade to me, right? And then they're like, oh yeah, sure. Okay, and then of course they halt trading after that. Okay, so after that, and so if you're a retail trader, right, you basically can't close the trade, right? And then during that, and then of course, so that's my first buy, right? And then of course, when it comes to $4, right? So all the trading halt, and then market reopen when it's at around $6 to $8, somewhere around there, right? So six to $8, right? At that point of time, no, it was around $6, So market reopen at $6, right? And every single one of the trades, right? If you take a trade, right? If you're not buying spot oil or Brent spot trading, right? Maybe you say you're buying physical barrels of oil, right? What will happen is that your trade will just be cancelled out. Okay, so then after that, I started trading oil at $6, right? And then of course I think I closed it at around $60. It's I think it made a high of over $90, right? So that's why you should always focus on wealth accumulation first, right? And of course, thinking back, if I didn't have funds that's available to me, right, and trading such huge volume, right, I will probably be stuck and probably get missed out on certain trades as well, right? Okay, so now not every market sentiment extreme results in a market top or bottom, right? And of course, and then of course that brings my point, right? Also, always always have cash flow, right? Always have cash flow, right? Now, cash flow meaning to say it's not to say how much savings do I have, but of course the income, right? How much cash is flowing through is flowing to you, right? So now I'm going to give you guys a little bit of investment, a little insight of how I do my investments, right? So now, first stage, right, is always the wealth accumulation, right? So you accumulate wealth, So once you accumulate wealth, then of course is the wealth preservation, right? So once you have accumulated wealth, you want to preserve your wealth. And how do you preserve your wealth, right? It's to never let it deplete, right, your reserve. Okay, so once you have accumulated wealth, so let's say for example, if you have let's say for example $10 million, right? So you have accumulated, right, $10 million. But if you were to, let's say if you were to go out today, to a really nice restaurant, open a really nice bottle of wine, right? A meal easily can cost you $3,000 or even more, right? So it would deplete your reserve, right? But what if you put that $10 million into work, right? And it generates cash flow for you, right? So you're basically getting free meals, right? Free expensive meals or whatever you want, right? And that is why, right? Number one, most important thing, build up your accumulate wealth, right? Build up wealth. Number two, then of course we increase our cash flow, right? Now I know I see a lot of people, right, who make this mistake, right? They don't want to accumulate wealth, right? Or they don't have wealth to accumulate, right? Since I have seen people who tell me, hey, Richard, I have $10,000, right? How can I preserve my wealth? I say, if you have $10,000, right, you shouldn't be preserving your wealth. Yes, if you want to accumulate wealth, but on a less riskier side, you can. But I would say don't preserve $10,000, right? Use that $10,000 to accumulate more wealth, then you can start to preserve, right? Because $10,000, I mean, if $10,000, let's say, right, a safe investment that stood the test of time, the Vanguard 500, or let's say for example the SPY 500, right, or iShares 500, S&P 500 iShares, right? So I mean, if you invest with any of the S&P 500 ETF, right, it should generate you with an average return of around 10% a year, right? So 10% a year on a $10,000, that is like how much? $1,000, right? And $1,000, then of course you have to think, right? How far can $1,000 actually how far can I go with $1,000, right? Whereas if you have, let's say for example, right, $10 million, right, you put into investment, right? It doesn't have to be super risky, just to be like a normal investment. 10% a year on a 10% a year on a $10 million, that would be how many percent? That would be $1 million a year, right? $1 million a year. Okay? So that's why often of course you might be asking, hey, but how can I get like $10 million, right? And now and of course, right, I'm going to teach you the way that I have done, right, and that is through trading, right? Okay, so now how fundamentals affect investors' risk sentiment, right? So we have a fear, we have greed, right? So I think there are two spectrums to investors' risk sentiment, right? Fear and greed, right? So extreme fear, extreme greed, and so on and so forth, right? So fundamentals data release, right? Like for example, employment, exports, inflation, interest rates, right? I think these are the few main data, right, and fundamental news release that will affect, right? That will affect investors' risk sentiment. Okay. Now let's talk about risk on and risk off currencies. Okay, risk on and risk off currencies, or what we call, or maybe risk on and risk off assets, right? So now risk on is what we call high yield or greed currencies, right? So risk on is basically when you are greedy, when you want to take on more risk, right? You would invest in this. It's more for institutions, lah. It's more for institutions, right? But of course, you have to understand how institutions think, right? How the big boys play, right? In order to kind of participate in the big boys game, right? So now these are what we call high risk currencies, high risk on currencies, or high yield currencies, or what we call high yield assets, right? So number one is the AUD. Okay, AUD. Now Australia, why AUD? One second, guys. Why AUD? Now because Australia mines a lot of gold, right? Australia is I think the second largest. I can't remember. Is it? It's either the second or the first largest gold producer, right? Gold exporter, right, in the world. Okay, so Australia correlates with gold, right? And of course, Canada is the top exporter of oil to the USA, right, to the United States. And New Zealand exports agriculture, right? I think New Zealand exports um, a variety of agriculture. We have like soy, we have wheat, we have coffee, we have livestock, right? Like cattle, pork, um, so on and so forth, right? So I think New Zealand exports a variety of agriculture, right, and supplies it all across the world. Okay, so now New Zealand, the NZD, right, is what we call a risk-on currency, right, or what we call a commodity currency. So what is, I mean, there are a few names to it, right? Commodity currency, risk-on currency, Greek currencies, or high-yield currencies, right? So there are a few names to it, but of course, just make sure that you know, right? You know, when somebody try to be smart with you, right? You know what they're talking about, and then you remember, oh yes, Greek currency or high yield currency. You know, someone, you know, all those finance bros, right? They like to use all those very very chim term, high yield currencies or high yield assets, right? Or commodity assets, right? Then of course, then you know, hey, actually, I know what you're talking about because I attended Wei Xiang's webinar. Right? And I think in the world of finance and everything, it's not complicated. It's just that the people in the finance industry likes to create very atas names for things, for simple things that represents simple things, right? And so I think you know it can be quite hard to understand, right? But of course, once you understand it, actually, actually, this is that, right? So I don't know. I think it's just in the finance world that a lot of people they try to make themselves look cool, look smart. I don't know, right? But I mean, for me, right? Because you guys know about my education, right? I come from ITE, right? I mean, at the start, right? I did have a hard time, you know, understanding, you know, because I was doing a lot of searching. I was doing like, hey, what's high yield currency? What's high yield? What's the word yield even mean? Or is it like high yield? Then I still remember I searched, okay, high yield, then I searched low yield, right? And then of course I, you know, all these is a different kind of thing, right? Like correlation coefficient, right? Or like some other weird forex terms or finance terms, right? So I think a lot of these are to kind of put people off and just to make it sound a little bit more professional. Okay. Now, just now we talked about the risk of currency. Oh no, we only have left like what? 20 minutes left. Okay, let me see if I can see. Later we see if we have time to look through the charts together. Okay, right. So just now we talk about the risk on currency. Now we're going to talk about the risk off currency. Now, risk off currency, we have or what we call the fear currency or the low yield currency, right? So now Switzerland franc. Now Switzerland franc, they have a good banking system there, right? A lot of people are parking their money in Switzerland private banks, right? But however, it's not only that, right? Now 25% of Switzerland franc is actually backed by gold. So imagine this, right? For every $1, for every one Swiss franc there are in circulation, there is a 25 cents worth of gold, right, in their gold reserve, right? Okay, so it is a big part of the gold reserve. So let's say maybe I don't know, maybe a country have, let's say, $100 trillion, right, in 100 trillion Swiss franc in circulation, right? For example, right? 100 trillion Swiss franc in circulation, right? So can you imagine 100 trillion? That means that there are $25 trillion, $25 trillion worth of gold in the gold reserve, right? So Switzerland franc, it also it is I would say it is kind of inversely correlated, right, with gold, just by a tiny bit, right? Not so. I think it affects the Australian dollar more. However, and that's why Switzerland franc is what we call a safe currency, right? Safe currency, low yield currency, risk off currency, or fear currency, whatever name that you choose, right? Okay. Then of course we have Japan. We have the JPY. Now JPY is a risk off currency, but there is some debate, right, on whether or not Japanese yen is still a safe currency. It is still a risk off low yield currency, right? So now Japanese yen, the Japan has kept its interest rate at negative 0.1 for in the past 7-8 years. However, I still do. I mean. It has really, really stable interest rates, but the thing is that it's at a negative interest rates, and that is the problem, right? So negative interest rates mean to say that the cost of borrowing is lesser, and the cost of repayment is also lesser, right? And the reason why Japanese yen cannot raise its interest rates, right, in order to fight inflation in Japan, right, is because a lot of their citizens have actually gotten used to the negative 0.1 interest rates, right? So they've gotten used to the negative 0.1 interest rates, and of course they have taken some loans and stuff and things like that. Right? Can you imagine 7-8 years with negative 0.1 interest rates? Surely you would have. I mean, if you're citizens, you would have to take some loan as well, right? Because I mean, it's cheap to borrow money, right? And so a lot of citizens they are in debt, businesses are in debt as well. So if they raise the interest rates, they risk a default, right? What I mean by default? Default meaning to say that they owe money, cannot pay money, right? So when a lot of the citizens and businesses go into default, right, that is when the real problem comes, right? Then of course the Japanese yen will just collapse, right? Right now it still continue to weaken, right? But it won't. It's not collapsing, right? But of course, if let's say they were to raise interest rates, we might have a mass default on retailers and on businesses, right? And of course, now inflation. Inflation is also a problem. So they can't fight inflation. They can't raise interest rates to fight inflation. That will cause the Japanese yen to weaken. But at the same time, they can't raise interest rates because they would risk a default, right? A mass default, right, across the country. Right? So I think there is a dilemma on the Japanese yen right now. It's not really. It's I would say, frankly, for this year, I would say it is safe no more. Right? It's no longer safe, but it is still considered safe. But I would say Japanese yen is looking a little bit gloomy, right, in the near future. Right? Now let's talk about the US dollar. Right? So the US dollar is the global reserve currency. Okay. So now, have you guys ever experienced? Have you ever heard of, let's say, Cambodia? Right. If you go to Cambodia, right, they are using US dollars. If you go to Mexico, right, they're also using US dollars. If you go to sometimes even the Philippines, right, they're also using US dollars. Lebanon, right, also using US dollars. Some South America countries, right, they're also using US dollars. War-torn countries like Syria, Afghanistan, right, Libya, they are all using US dollars, right? Countries in Africa, right? They're also in the Africa continent, right? They're also using US dollars. So US dollar is a very, very important a global reserve currency, right, for many other countries. Right? So can you imagine if the US dollars were to suddenly inflate, do a mega inflate, or the US dollar goes bust, right? I think that would be a really hard time, right? So I think that's why we have the Federal Reserve, right? The US have the Federal Reserve to keep a very to keep track of the value, right, of the US dollars, right? Because the US dollars is such an important currency, right? And I would say almost the whole world is using US dollars, and it's the most recognizable currency, right, in the whole entire world, right? Now, we have 13 minutes. Okay, so let's look at sentiment analysis. So we have risk on sentiment, which is a greedy outlook, right? Now, when there's a greedy outlook, investors, risk sentiment, institutions, or even yourself, right? We would tend to sell the safe assets and buy the risk assets, right? Vice versa on the risk off sentiment, right? Buy safe, sell risk. Okay, so risk on sentiment, it lasts longer but slower, right? So greed takes time to accumulate, right? And risk off sentiment. So this is a fear sentiment, right? So fear sentiment, when you're scared to lose money, everybody quickly keep their money, right? So just like if you go to a casino, right? And if you know a behavior of a casino of a gambler, right? Starting bet how much? Then go to casino. I think minimum is $100, right? $100, $120, $150, then $200. Before you know it, $1,000, right? In betting $1,000, right? So greed takes time to build up, right? So that's the saying, right? The market takes the elevator down, but takes the stairs up. Right? So when it comes down very fast, right? But want to build greed, build quite slow. Okay. Great. Awesome. Now we are done with the slides. Now I'm going to allocate 2 minutes for Q&As. Right? Allocate 2 minutes for Q&As before we move on to the charts. All right, Ken? Come on, guys. Awesome. Okay. So far, everything okay? Managed to understand everything? How are we? Okay. John, Kevin, Tanai, William. Okay now? Any questions? Okay. 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 Seems like no question, huh? Okay. Cool. Okay, now, because I have 10 minutes, right, I'm going to do a speed run. And show you guys what we are up against today. Okay, so we'll start with AUD. I don't really like AUD, right? I think because AUD, I think AUD is quite it's quite a consolidating pair. Don't really like it. CHF 51, right. It is on a daily time frame. Right. I think even on the weekly time frame, you can see that it's kind of consolidating. I'm just hoping that it will kind of do an impulsive move soon, right? Because I want Japanese yen to weaken soon, so I can enjoy my time in Japan. For those of you who don't know, I'll be traveling to Japan soon. in the next 2 weeks. We're flying over to Japan for about 20 days. So I'll be doing a lot of my meetings, a lot of my webinars right in Japan. So let's look at the price action for, okay, very nice. PoundsCAD. Very nice price action for PoundsCAD. What I'm going to do is I'm going to take a buy limit order on PoundsCAD over here. I'm going to place a buy limit order and then just wait and see, right? Just going to place buy limit orders, right? Because no chart is worth our time to keep staring, and life is too short to keep staring at the charts. Right, so just put our buy limit order and we will then just walk away and do our let life pass by. But this will give us a really nice 1:16 risk reward ratio on a PoundsCAD. Let's try for this and see if it works out. If it doesn't work out, then it doesn't work out. Right? Now I have to just leave you guys. Okay, so now how do you calculate your position size if you want to make a trade? Right, go to this website, position size calculator. Right, it's going to be your best buddy. Right, just going to send you guys in the link, the link in the chat. Right. So how do you use this position size calculator? Just select the currency pair that you're trading. For example, if you're trading Euro US dollar, just go ahead and select Euro US dollar. If you're trading any other currency, like this, right? It's USD. We're trading what? PoundsCAD. Right, PoundsCAD. Just go to PoundsCAD. Right. Account currency, account size. Right. Just put in your account size here. Your account currency. If you're trading in US dollars, like me, right, just select the US dollar. Right, risk ratio, right? I risk 0.2%, but if you're on a smaller account, then you can risk 1%, 2%, don't put anything above 2%. Okay. Number of stop loss and tips for this trade is 10 pips stop loss. Right? And then of course by then you can calculate. Okay, then of course it will give you your lot size here. Right? Don't copy this lot size because this lot size is based on $100,000. Right? Let's say you have let's say for example, you have $25,000, for $2,500. Right, it'll give you calculate your lot size that you should be using. Okay, so I'm going a little bit fast today, right? Because I think I've made up for lost time, right, during the technical difficulties, right? Otherwise, we would have quite a nice webinar today, right? Okay, now GBCHF, for those of you who entered, we are currently floating at in profits, right? Now what I want to see is this candlestick close, hopefully as an engulfing candle, or if not, then of course of course it's not, then double is a twisted top. It's fine as well, right? So GBCHF, we are currently in this trade, right? Risk reward ratio on this trade is this reward ratio on this trade is how much? It's the 1:12, so not too bad. 1:12 risk reward ratio. Right, GPY currently coming down a little bit. Let's have to wait and see what happens next. Bonds, GBP, NZD. I'm not going to take any more GBP trade because I want to limit my exposure on bonds, GBP. Still keeping my buy limit order on NZD JPY. So if those of you who want to follow, this is it. I'm going to give you 1 minute. Right, if you cannot enter the trade that fast, then of course I'll just take a screenshot. Right, and then of course we have to move on. Okay, and 5, 4, 3, 2, and 1. Okay, now let's move on. Okay, now anyway, yeah, we have time to enter the trade, right? Since we have already gone through everything. Okay, now questions. Right, well, you can enter the trade and you can ask questions at the same times. Right? If you have any questions on any charts that you want me to look at, now it's your charts, right? Because I only have about 3 minutes left. How have you discussed with your wife? Okay, let's see. Okay, I think it's wait, hold on, guys. I just want to look. If you guys have entered, just take a screenshot because I'm going to change. I'm just going to look at the Japanese yen charts, right? Okay, so AUD I have this by the minute order as well. US dollar, Japanese yen, we are in this trade already. Okay, so for those of you who wants to follow my AUD trade, this is it as well. Feel free to follow it. Okay. Oh, okay. All right. Cool. Final 2 more minutes. Okay. So just use the exact same position size calculator that I've shared with you guys, right? And manage your risk properly. Right? Make sure you for the NZD JPY and AUD JPY, it's a 20 pips almost straight. Let me just double check. This is a 20 pips almost straight. So this is a 1 to 10 risk roll ratio on NZD JPY. This is a 1 to 14.5 risk roll ratio. Okay. Okay. So now, ladies and gentlemen, once again, guys, thank you guys so much for joining. And yeah, so we have to rush through we have to rush through the charts today, right? Because we have limited time today, right? Tomorrow, there's a webinar. So I hope to see you guys tomorrow, 8 p.m. to 9 p.m. Once again, guys, thank you guys so much for joining. Hope to see you guys tomorrow. Hope you guys enjoy the rest of your evening. Have a good evening and good night.